It's time for the big three. We've got 3 stocks, 3 charts, and 3 trades. Rick Ducat, of course, taking us through the charts as always. And here to take us through the trades is Scott Bauer from Prosper Trading Academy. Great to have you both with us. Scott, I'd love to start with just a big picture thought on the market action we're seeing as we kick off December.
Big picture, at least the flavor of the day is what's happening in Japan, the JGB 10-year, 30-year, what's happening with rates there. So that's putting, our markets in a little bit of a cautionary stance ahead of the Fed next week. We still have some pretty major earnings this week, especially in the cloud space. But, we seem to have many different things coming at this market, Marley, on any specific day. And right now, it's the Treasury markets, and not just ours. It's across the pond and across the world. So we've got to see what happens there. I think the market has held up reasonably well in the face of everything being thrown at it. So I'm cautiously optimistic here.
All right, cautiously optimistic. So with that said, let's move into your first trade here. My last guest also highlighted this as a potential good play in the retail space in this bifurcated economy we're dealing with. We're talking about Costco here. Walk us through your thesis on Costco.
I love best in class, regardless of the sector, whether it's retail, financials, whatever it is. Best in class. There's no question Walmart, Costco, those are best in class. And after the trading action that we saw last week and holding those lows sub 900, I really like that. And if you just look at the chart doesn't look great. It really doesn't. But I am looking for a reversal to the upside here. So I am going to look at something here that does have a little added risk to it. I just want to point that out, but I'm going to identify what that risk is. I'm going to sell 2 of the December expiration 990 calls, way up above here. And I'm going to buy one January 930 call. So it's almost like a poor man's covered call type of situation. I can do that and pay $16, $17, somewhere in that range. This is definitely a bullish trade. My risk to the downside is that the stock goes down and I lose that $17. To the upside, the risk comes in because I'm short one extra call that expires on December 19th. But this position is protected all the way up to Costco reaching 1,035 by December 19th. So I really like the potential upside in this play.
All right. So with the potential upside, and Rick, knowing that we should note we have earnings in that time frame that Scott was just mentioning, earnings coming out on December 11th. That's when they're expected. As we look at the chart here, what's it indicating to us as we are, about a little less than 2 weeks out from their earnings?
Right, so when we look at this setup here, we do have a chart that maybe doesn't look the greatest. We have been trending downward from those high areas near 1078, which is where we had our initial high, then the failure to retake it. Then we have been traveling downward here. However, we did hold on to our previous supportive areas here. We had our worst close here previously and our intraday lows here. This area between about 872 to 890 or so, that's where we held on. We did not make any new significant lows. To give some context to what Scott was saying as well, 930, that's about right here. That's our recent relative highs. 990 would be right around this area right here. So that would be where the other area of interest for that particular trade would be that series of highs from the summer months. So when we look at some of our other studies here, we have our moving averages. First of all, our yellow 21-day exponential moving average comes in right here. That's about where price is stopping so far right now. It lines up with our downward sloping trend line. So this area we can also see is where we had a repeated series of low points. So here, as well as here, that's around where we bottomed out in terms of our closing prices. So quite a bit of factors coming together right around that 910 area that would signify a potential breakout or rejection area, depending on your perspective here. If we do look also at that 930 level, our 63-day EMA, our orange line here, lines up very closely. Our purple 252-day, it comes in at 933. So once again, a potential confluence to watch out for in that area. RSI is still on the bearish side, but very close to the 50 midline as well as its own red trend line. So look for a breakout in that indicator as well, corresponding with any price breakout. finally, when we look at our volume profile study, point of control, heaviest trading area, comes in here near 945. We also have our linear regression line in teal, our fair value line at about 937. So once again, very heavy confluence of technical indicators in that general area to be on the lookout for if we do hold on to these lows near 890.
And that fair value number you highlighted at 937, pretty close to that 930 call that's a part of the trade that's got highlighted for us. But right now for Costco in advance of their earnings, trading at about 911.24. Our next one we're talking about here is Seagate Technology. Now, they've had quite a run recently in the last 5 days, up close to 13%. You know, what's your move here, Scott?
Huge run, and that's great. I love the run, but there's a pretty big backstop resistance-wise up around that 300-ish level. Implied volatility option premium is still very, very expensive. So I really like still some of the upside in Seagate, but I'm going to sell an out of the money call spread that expires in a few weeks on December 19th. I'm selling the 295 300 call spread. Can do that for a credit of $2, maybe even a little bit more. So, you know, in the next few weeks, that puts the break even there at 297-ish, maybe just a tad higher than that. And I think with the option premium, that implied volatility being where it is, that's a really nice opportunity just to say, you know, maybe Seagate's not going back down, but that resistance that's up there, that's what I'm playing it off of.
All right, Rick, so as we take a look at the chart for Seagate, certainly a very different looking chart than our last one. You can see this, you know, progressive move to the upside, particularly in the recent weeks here. You know, what are the technicals showing us?
Right, so we've given back some of those gains, but still the rally has been very steep and very strong. We topped out here, 297.88, and from there we have trended downward in the short term here. But really, I mean, this isn't much of a trend line. I'm just trying to characterize the price activity here that we're seeing a lower high so far. But you also have to couple it with this area here where we saw an increasing series of highs, mostly that fit along this trend line here. So by that measure, you would say the uptrend is still in play in the broader sense. We do have this area as well. 279 is where we had a small gap. That was the low point that we had before our small gap down. We've topped out a few times just below that point. So 279 stands out as one area to watch to the upside. To the downside, relative lows around 230 or so here, but that's also where we saw some highs come in terms of our closing prices and intraday highs there. So that was another area that potentially stood out to the downside. So now when we look at our moving averages, our 21-day EMA is the closest. So that's our yellow line here, right about 260. So that could be a supportive area to the downside in the short term. We also have our 63-day EMA, our orange line, lining up with that green area that we highlighted earlier near 232. RSI looked like it was perhaps going to break up above that trend line there in red, but hasn't really happened so far yet. Same deal again. Look for corresponding breakouts with both of them for confirmatory evidence about the strength of the price movement. Now we can see that our volume profile shows that the area near our yellow 21-day EMA near about 260 or so, that's the nearest heavy trading concentration area. So that's the supportive point. Volume picks up once again here in this range, 212 to about 232. That's where we had our EMA. Once again, our fair value line too, our linear regression line. Those are the downside points to watch out for.
And we are seeing shares under a little bit of pressure today, down about 2% at 271.09 right now. But on the year, up more than 210% so far year to date. Now, a very different looking chart for this last one. We're talking about Exxon here. Not any major moves so far this year, only trading up about 8%, but a much more volatile looking chart here, Exxon Mobil.
Yeah, especially for a stock like this. And, you know, is it a little bit top heavy now on this rally that we've seen, and how much did the OPEC decision really influence this? So when I look at the entire space, but specifically Exxon, I'm looking for, and Marley, you and I have talked about this quite a bit, that, you know, this in the oil space, it's really been a sell the rally. So I'm kind of in that camp with this one right now with Exxon. So I'm going out a couple months. I'm going out to January expiration, and I'm just buying a simple put spread, the 115, 110 put spread. Do that really, really inexpensively. somewhere around $1, maybe a little bit more. And I'm just looking for Exxon to kind of come back and fall back to the pack a little bit, retreat back to that 50-day moving average here. Again, I think we're still in this environment overall where for oil stocks, oil-related energy stocks like this to really break out, there's got to be a change in what we're seeing here from the fundamental side of things, and I just don't see that.
All right, Rick, so as we take a look at the technicals here and looking for any potential signs of a breakout, are you seeing any?
Well, I mean, to start out with 115 to 110, that's right about here. I had the 115.50 level highlighted because if you look all the way back here, that was the high point that we saw after a rather severe gap downward. That was the beginning of an even worse decline here. But once again, going forward in the year, that was around where we hit our highs. We did have one brief close above that level, but quickly slapped back down. So now that would be the level that I had my eye on potentially to the downside, so that trade would be looking for a push below that level here. 112.50 is also another notable area. That's where we bottomed out a couple of times previously during the last time we touched near that upward sloping trend line here. So now we are kind of between not only the supportive area potentially or breakdown point, depending on how you look at it, but also near 118 to about 120 or so. That's the low point that we had before our gap down, as well as our previous highs. So that gives us our red and pink lines here. And indeed, that's about where we topped out again in terms of our closing prices. Intraday highs made it up to 120.81, but no lasting breakout there. When we look at RSI, breaking out to the upside, breaking above the 50 midline here. So that's more of a positive sign for the bulls. We also are pushing above our yellow 21-day exponential moving average so far. So things are still a bit of a question mark, though, because we have yet to overcome that resistance level. Finally, we can see volume nodes here and about here as well, showing 115 and 118. Those would be some heavy trading areas to consider going forward for potential consolidation or slowdown.
And right now trading right in between there, 116.85. So right in between that 115 to 118 mark. Want to thank you both for being with us today for Big Three. Rick Ducat, as always, for breaking down the technicals for us, and Scott Bauer from Prosper Trading Academy for those trades today.